Thank you very much for joining us this afternoon for what I know is going to be the most exciting panel of all, but certainly the most important. Because this is the moment when we talk about how all the technologies you've been discussing all day, how some of the interesting businesses you've been looking at upstairs, how they help the people who are not in this hall, who are not at this conference, and if they are, they probably served you tea and coffee, because this is a panel about how new technologies can transform the lives of the underbanked and the unbanked. And in order to have a conversation about this, we have assembled a rockstar panel for you. But because you're all digitally literate, I'm going to rely on you either to read their backgrounds up here or look them up. But take my word when I say these people have looked at the question of financial inclusion from absolutely every angle, from an international perspective, from the banking perspective, from the credit perspective, and the payment perspective. And what I want to do is just cut short the introduction so that we go straight to the meat and drink of this question, where we debate and discuss what FinTech can really do for the underbanked and the unbanked. But before we kick that off, I'm going to just lay some facts on you guys so that we are all starting from the same basis. And then we're going to test your knowledge to see what kind of a problem you think financial inclusion is or is not in the UK. So I'm going to kick off with some facts. The first fact is that around 2 billion people globally do not have access to banking services, and perhaps not unsurprisingly, there is a skew towards women not having access to the kind of financial services that men have. There is an estimated 27% of adults only globally who are able to save any money. And in the UK, the country is ranked only 9th in the world in terms of banking inclusion by the World Bank. Almost 8.8 million people in this country are considered over-indebted, and 77% of people who deal with some of their financial difficulties by taking out a payday loan, they take it out to do what? To pay for food. So this is a really serious challenge. Some of the things in this market are going in the right direction. So more and more people in the UK are getting access to banking services, and we're going to test your knowledge in a second. But there are some things that are going in the wrong direction, and one of the things that are going in the wrong direction is the savings ratio. So the savings ratio has actually gone down in 2016 compared to 2010. So more people are getting access to banking services, but there's some additional challenges that are becoming visible. So that's a little bit of the background. Well, we're going to test you with 2 questions. You should have your apps at the ready. If you don't have an app, how many of you are going to use the app in order to answer this question? Oh, that's not very good. Right. You're at a conference, a digital conference. Well, we're going to ask the question on the app, and then we're going to quickly do a manual sort of hands up and hands down, because it's just not inclusive enough to have 5 people in a room like this to participate. But the first question we're going to go to is, how many people do you think are unbanked in this country? So here's some choices, right? So 2 million people are unbanked, 1.5 million, 1 million, or 500,000 people. So those of you who have downloaded the app and are digitally savvy and native, you go ahead, you play now, and the rest of you contemplate. It's like a game show. I'm liking it. All right, so 2 million people is the winner in the initial round, okay? But we're quickly going to do a show of hands just to see, make sure everybody's involved here. So how many of you think that 2 million is the right answer? 2 million, okay. 1.5 million? Okay. 1 million? Couple, okay. And 0.5 million? Nobody. Okay, so the right answer is actually 1.5 million. 1.5 million people in this country do not have access to banking services. We're going to ask a second question, and we're going to do the same thing. We're going to do it in this sort of partially digital, partially manual way. And the question is, I'm going to read this out. How many people in the UK do not have enough savings to support them for 1 month if they experienced a 25% cut in their income? Right? So if 25%, if a quarter of their income disappeared overnight, how many people would not have enough savings to support them for 1 month? Okay, so let's just get the voting started. There we go. Okay, so the winner here is 10%, 13, 7, and 3. Okay, can we quickly do a show of hands? Who thinks it's 13%?
13 million.
13 million, sorry. I think so, 13 million. Okay, 10 million? A bit more. Okay, 7? Not so much? 3. Okay, nobody thinks it's 3. The real answer is actually 13. The real answer is 13. It's quite an extraordinary number of people who cannot afford 1 month because they don't have enough savings if a quarter of their salary or income was cut. So that really kind of sets the stage for the conversation and some of the challenges that we deal with today. I'm going to kick off with a broad question, Eva. So it's all fine and well to think that technology is going to absolutely transform everything, from healthcare and now also financial services. But what is FinTech really going to do for the kind of people who don't have access to these services?
It's a great question to start with, Dan. Thank you. And I didn't know I was getting the first question. I think FinTech has an extraordinary power and potential behind it. The critical thing is going to be harnessing that power for good. There is an extraordinary opportunity for FinTech to provide access to convenient, and when I say convenient, I mean convenient to the end user, affordable and secure financial services, which they don't have access to today. And if we use the technology in the right way, that's a very realistic potential deliverable for those individuals.
So Virraj, let me come to you now. You founded Pockit, a bank that has skyrocketed over the last couple of years, focused just on the unbanked. and Virraj's business is really fantastic. Look it up. I don't say that because I have an equity stake in it, just to be clear. No, but my serious question to you is, I remember conversations we've had about getting the kind of people you're focused on more comfortable with the whole idea of banking service. And I wanted to, can you share some thoughts about what the cohort needs to feel comfortable with the offers of FinTech?
Yeah, sure. I mean, I think from our experiences, what we've seen is that we actually need to complement sort of online and offline for our customers. So doing everything in a completely digital way is not going to solve all the problems, but there's a real desire from all of these customers, in the same way as any other customer, to be in the digital world, and especially to be transacting online, because that's typically a 20% saving between what you can do online versus what you pay offline. So things like Amazon and paying your utility bills by direct debit and all these kinds of things are not available if you're just a purely offline customer. So what we've seen is that we've had to really think through our kind of customers' journey, their experience, how they manage their money on a day-to-day basis, and really think about product, UX, design, all these things to be a core part of the way we then deliver the end service. And so, we still see, I would say our kind of customer acquisition is split 50-50 between online and offline. We see offline growing as a much bigger part. And we also see our services being kind of availed in an offline environment as well. So for us, it's really about complementing both of those mediums and able to meet the needs of the customer. We're talking about convenience, and that's a really important part of being able to provide the service. It's got to be convenient, so sometimes offline is a part of that.
Interesting. I wonder whether there's a segue here into financial literacy, because Toynbee Hall and Tower Hamlets, which is a charity that looks at financial inclusion, did a study, and they concluded that some of the assumptions people have about the financially disadvantaged aren't quite right. And one of the key points that emerged from this study was that people choose not to have a bank account because they feel more comfortable managing cash. So how much of an effort do you need to put on digital, on financial literacy in order to help people on that customer journey you talk about?
Yeah, it's becoming a bigger and bigger focus for us. So financial literacy is really important. I think what we are finding, though, is that whilst there are some people who just really do want to stay in cash, we're seeing there's more and more people who want to come out of that bracket because they want access to some of the things that I was talking to you about earlier. But what we are seeing is that in order to get more engaged with the product and start using different features within the product, so let's take an example of lending or helping them build their credit history or things like that, we're building in sort of financial education tools into the product to get them more engaged with that. And then that helps their literacy, and then that helps them get more engaged with their overall product and move up their scale of financial literacy. So it's important.
Eva, you play a role at the PayPal's philanthropic arm, where you back a lot of charities that are focusing on some of these issues. Is that something you see as well, this importance of financial literacy in conjunction with the digital offer?
Yeah, so PayPal Giving Fund UK, we don't actually look at financial literacy of consumers, but rather helping charities make it easier for them to receive donations. And in doing so, helping those charities with their own understanding of sort of digitization of financial transactions. With regards to the Toynbee Hall research, actually, we at PayPal have worked closely with them, and I've personally also worked closely with them. And I think what's extraordinary about their research as well is not only the importance, which Virraj has pointed out in terms of the literacy piece, but also who they hear that message from. And one of their key learnings is that there are certain individuals in the communities who individuals will be more willing to listen to rather than others. So something that we consider as we consider products is also, are we the right channel to be providing that message? And that's something I think that will speak to a broader theme, which I'm sure we'll get to later in this conversation, which is our view, which is there is going to be no one solution to financial inclusion, nor is it one party's solution either. It's rather going to be coordination across government, educational institutions, the nonprofits, and of course the private sector.
Interesting. Freddy, I wonder if we can come to you, because through your work, you have begun dealing with, if you will, one of the gateways to financial inclusion, namely people's credit history, which famously is very difficult for people to get if there's a sort of paradox. You can get a credit history if you have a credit history, and if you don't, you can't. So there's a catch-22 for the very people we're trying to help. Could you tell us a little bit about how you've tried to overcome that?
Yeah, well, I mean, the first thing to focus on is how opaque it is, right? I mean, we talked about the language and the user experience. One of the things people care most about when they're borrowing money, beyond interest rate, is how easy it is, right? So there are people that are borrowing money because they can pick the fastest route rather than the best route for them. And your example about buying food with payday loans. So the first thing to tackle is actually making people understand the concepts. And the concepts that run behind credit scores are really sort of opaque and unclear. There's this chicken and egg thing where it's like, I don't have a credit score until I've borrowed money, but there's also this idea that there's all these kind of magic tricks that you can do to sort of improve your credit score, and it's this dark art. And the problem people have is that there's no direct link between their day-to-day and their ability to get credit and how that whole process works. So our interest really is sort of working on the underlying nuts and bolts rather than sort of trying to build something new, but actually providing a service to the lenders that allows them to take in more data, particularly behavioral data for those people, so that they can get a fair price.
But to be a bit sort of honest, I was always taught to ask the Latin question, cui bono, who benefits? And cui bono, who benefits from the existing system? Well, the existing banking structure benefits, and they benefit because it's just not very lucrative for traditional banks to go through the process of offering credit and offering banking services. So there you are. You come along and say, I've got this new way of doing it. We can look at all these other data sets, and actually these people are more reliable. What's the reaction? Is the reaction, well, that may be the case, but we don't really want to go there? Or are you finding people are genuinely engaging and think, okay, there is a customer segment here we haven't looked at. This could be a way to do it better? Yeah,
I mean, in some cases it's the former. People have a kind of, it's the way it's always worked, why would we change it approach. But it's not a small segment. There's about 12 million people in the UK that can only gain access to high cost short-term credit, right? So anything 100% or above interest. And those people, lending to those people isn't sort of charity. It's actually a very profitable business. It's just doing it with the right processes underneath. And one of the things we're looking at is the companies that want to look at that segment of the market and allowing them to do so. So absolutely, I think it doesn't have to be stuck at this sort of rigid, we're going to cut the line here and that's it. It's just about making the process more transparent.
Kabir, if we can go to you and expand our conversation out, because you've spent a lot of time internationally. You started out at the World Bank, and then you worked with the Indian Finance Ministry and spent a lot of time focusing some of these financial inclusion issues in South Asia. And I just wonder, Hannah, listening a little bit to that conversation, how that feels comparing to some of the other jurisdictions you've been working with.
Yeah, I think the question in front of us is, does FinTech matter for inclusion? And I can tell you with great confidence, working in emerging markets for over 10 years, that if we hadn't focused on technology and digital channels, I don't think we would have brought millions of people into the formal financial sector.
You think it was crucial to bring the transformation?
Essential. And for two reasons, two main reasons. Many reasons, but two main reasons. One, that it was a direct channel. The cell phone in particular provided a direct channel to people. It was a great leveler. And the other reason is business model. It drastically reduced the cost of serving people that transact at very small ticket sizes. So you couldn't go through traditional channels. You couldn't have traditional cost structures. You needed something that was radically cheap. And the World Bank FinTech survey, the previous one, found 700 million people were financially included between 2011 and 2014. The vast majority of them in Africa, that was made possible primarily because of mobile money, because of technology-enabled financial services. The new FinTech actually is coming out in a few weeks, and I suspect you will revise your 2 billion figure.
That's interesting.
And I think, again, a big driver will be technology. For example, in India, a big driver is the India stack. Eva and I were talking about that. So again, digital infrastructure, really enabling last mile access for 300 million people.
That's fascinating. I wonder whether, since you picked up on India, we can then talk about the thing that most people want to talk about in the Indian context, namely the Aadhaar digital identity. I don't know if you're familiar with it, but in India, the government has managed to roll out what the UK government has failed to do over many years, which is to give 700 million people or more digital identity, and they've done it in an extraordinarily fast and impressive way, and everybody says this is going to give access to a whole series of other services. Dave Birch, who was on the panel before, has talked about digital identity as the new money. So do you see that as a critical kind of driver in the next couple of years?
I definitely see that in emerging markets, for sure. I think and it's not just the national identity. It's other pieces of digital infrastructure that have been linked to the national identity. For example, right now, all the banks are interconnected through an API layer in India. You heard of WhatsApp-enabled payments in India. That was made possible because of that piece of infrastructure. So, and this is, again, digital. I remember being engaged with a survey where people went around asking Indians, are you online? They would say, no, we're not online, but we're on WhatsApp. And so
there's a salutary lesson here in the UK when these things are going faster in India.
Actually, things are indeed going faster in emerging markets, this is not because one of the main reasons for that is you're dealing with legacy infrastructure, you're dealing with things that exist already that we need to evolve from, and as you alluded to, there are incumbents, there are entrenched interests, and that makes it harder to evolve.
I wonder whether I can there's a sort of segue here between what we talked about before, financial literacy, and this question, because the more and more of these services that are made available in places where there's lower financial literacy, greater challenges emerge. And I was struck by one example where in South Africa, and we talked about this before, the government decided to pay social credit into people's bank accounts. And what happened was the banks very quickly seized on the opportunity, as any good business person would, and started selling on top of that different kind of services that were then immediately withdrawn from people's accounts, the result of which was, in order to get access to government payments, welfare payments, suddenly people ended up out of pocket because they didn't quite understand what they were signing up to. So that's an example in a developing context, but I assume we're going to deal with something very similar. I wonder if you can take a first crack and other panelists can think about
I think it's important to separate these questions around financial literacy, digital literacy. I think we are pleasantly surprised that people are in fact quite digitally literate, right? They have their own digital world, might be different than yours, but they are quite digitally literate. And we've done lots of surveys and studies that show that people have very active and increasingly active digital lives. So I think financial services providers need to be smart about that, especially when they are reaching people that are previously financially excluded. I think that government, frankly, I think has not done enough in lots of countries. So to your example, I think there may have been a false start there for some reasons, but in most markets you want government to actually play a more proactive role, pushing the private sector, pushing the supply side to do more. To close the inclusion gap. I would say they've done a lot. A lot of governments say that we've done a lot. Financial inclusion strategies are national strategies. I don't think that is in the UK, for example. So financial inclusion strategies are up there as a top government agenda. So that's a lot. But they could do a lot more, in my opinion.
I wonder,
that's just on that point. I mean, I think we've seen here in the UK, I mean, a fair amount of talk, but not a huge amount of action, especially sort of from public sector. And it's being left now to private sector companies like ourselves to solve this problem. And I think, and Dan, we and I have talked about this a lot, but there's an element of real need of partnership between government and fintech in this area. They try to force the banks to provide bank accounts to unbanked consumers. Still hasn't solved the problem. Nothing's really happening because we're still servicing so many of these people who don't get access. So I think there's a real kind of disconnect between actually like action on the ground versus talk, and that needs to change.
I'm just going to ready you all that when we have a few minutes left, I'll come back to what each one of you would like to see different from government. But I want to take this question a little bit onto security and cybersecurity, because it strikes me that that's an issue you often talk about across the other panels we've been listening to today. But the more that you get financially disadvantaged people onto online and digital services, the greater exposure they have to a certain risk, the impact of which is much more difficult for them. If you raid my bank account, one of them, I can probably find a way to claim the money back, deal with the liability of the bank versus my own liability, and I have other bank accounts. Whereas if you get somebody on that does not have perhaps the wherewithal or the access to so many different services, that hit is much more fundamental. Eva, do you want to just think about this?
Sure, and I think it comes back to Raj's point around financial education, really. And you raised the point that the previous panel was talking about identity, your digital identity being the new money. I think it's absolutely critical that we acknowledge how important one's digital identity is, and I would argue it's a responsibility across both the providers and the third sector and government to educate on that topic. We can go back and forth in terms of who's responsible for what, but the important point is that we acknowledge that it needs to be done because it is quite critical. And I'm sure Freddy has a lot of experience from individuals who've been impacted negatively from a credit score perspective with such incidents.
Yeah, I mean, it's really interesting. It's kind of drawing a line between fintech and what we can do. And I think of fintech as solving problems quickly, right? We're startups, we're building things that didn't exist before. And there's this kind of bubble in fintech where we look at sort of, I think the terms like Henry, high earning, not rich yet, like we'll go after, savings, investments, things like that. But if you can get access to the people that have these problems, they're very often really simple problems, but they don't have the connection to convey them to people like us. So very often that's the biggest divide. It's just, how do you get those solutions to the people that need them? And things like Pockit, companies here are starting to do that, but there's definitely support we can get in that process to be just exposed to the types of problems that these people are seeing and being able to build solutions for them.
Great. In the remaining 3 minutes, if we can go through what each one of you would like to tell the government here, what they should do. The one concrete thing you would like to see the government do to support some of your efforts and some of the efforts of others that you've seen in this space. Maybe, Virraj, you started this, so you might as well continue.
Look, from a purely selfish perspective, I think it would be very much around partnering up directly with fintech players such as ourselves to solve the problem around financially excluded consumers. There are still 2 million people having their benefits paid into what's called the post office card account, which doesn't allow you to transact, doesn't allow you to do absolutely anything as a customer. All you can do is, on benefits, take out cash over the counter at a post office. And this is, we're nearly in 2020. It's an absolute, it's absolutely crazy. So we think we should, they need to wake up and work with fintechs like us to solve the problem.
Yeah, I mean, this may sound like a cop-out, but I think it's important to have a clear understanding of the challenge. And so raising the profile of financial health in the UK, exactly how bad it is, I think it's very important. And we are doing that in the US, for instance. We have a Investee, Center for Financial Services Innovation, that later this year will start sharing data on the state of financial health in the US in a more systematic way. And so I think if we did similar things in the UK, I think that would be significantly powerful.
Great. Freddy.
I mean, beyond the obvious sort of investment and raising the case, I'd say apply some pressure. As Virraj mentioned, there's a lot of people that are customers with traditional banking just through inertia. There are better products out there, and we as challengers need to be able to get into those conversations. So, I'd say, put some pressure on the old school to change.
More pressure on the old school. Eva?
The sort of, following on what my colleagues have said here on the panel, I think if we come back to the point that the pace of change is extraordinary and it's unprecedented with mobile and the digitization of financial services, there is tremendous opportunity, and there are players, many of which are in this room and some of which are on this panel, who have a great opportunity to address financial inclusion in this window of time. That doesn't mean that they will do it, though. And if we talk about what government can do to help support that initiative, and as I stated previously, I do think it's a sort of cross-ecosystem initiative, that's measurement. And so not just measuring how many people have access to a bank account or payment services, but rather start measuring the convenience of access to financial services, start measuring the access itself, and start measuring the security of those financial services as well, and reporting on those, and reporting on them regularly and consistently.
Thank you very much. Just wrapping up here, I'm just struck by the fact that we're living in an age where we both think the answer to everything is technology, and an increasing number of our fellow citizens now blame everything and all the ills of our society on technology. And it strikes me that for both public sector and the financial sector, to avoid the sort of backlash that we're seeing in other parts of the digital economy, that it's hugely important that we focus on this issue of financial inclusion, accessibility, and the concomitant issues around literacy and security, and so on. We've only had the opportunity to begin, discussing this, but I hope that as the day goes by and you attend tomorrow, that you continue to put financial inclusion at the forefront of your mind, and perhaps also ask what you and your institutions, whether at funds or in banks or at FinTechs, what are you guys doing in order to ensure that this large amount of people in the UK, 1.5 million, and globally 2 billion people are not part of these kind of conversations. So with that, please thank the excellent panel for joining us today.